Hi, welcome back. I want to show another example from a couple of days ago of how retail traders often are making mistakes and how to overcome that, how to make better decisions as a position trader. So this is about position trading, holding trades for a little bit longer of a period than the Norden method, for example. So if we go back to Friday of last week, which is the end of the first week of October, what we saw was that on the Saturday, there was expectations of an announcement out of China regarding the stimulus package. Now, everybody knew that this was going to come out on Saturday. So I want to look at the Friday morning session, okay? So I, with some traders that I work with, put out a recommendation that I thought that we could be buying copper on that day, copper futures. Now, in terms of levels, again, it didn't matter. I just felt that it didn't matter what price at that moment. It just, in that morning session, I thought it would be a good buying opportunity. Now, why did I think that? Well, think about it. The next day, there's going to be an announcement on potential stimulus in China. I'm not necessarily saying that everybody's going to be rushing to buy copper ahead of that, although some people might. But I do think that sellers are going to step away in that environment. I think if you're someone that is potentially looking to unwind copper, you're probably going to wait for that announcement, right? Why would you sell it in advance? So thinking about how the market will trade that day, think about what are the participants likely to do this day? Are they likely to aggressively sell copper? That's one of the questions you ask yourself every time you have a trade. Is the opposite trade likely? Do you think people are likely to aggressively sell copper the day before an announcement on a stimulus package? I didn't really think so. I'm not saying copper was going to go higher. I think you could have got almost like an easy free trade. And reality was that we were able to buy that morning. Trade never really went against us, and copper sort of ground higher, as other metals did as well. And we also looked at potentially gold and silver on this trade. So there was a grind higher. But, and this is the important thing, this was only an intraday trade. And I made it clear, we hold this trade intraday and we get out. Now, if we think about it, the idea of holding this trade over the weekend until Monday is a completely different trade. That's now saying, I think there's a stimulus package and it's going to be a big one. And that's a completely different trade. So my trade idea was just that, just before this announcement, I think you can get kind of free run-on-long trades, and that happened. Holding it over the weekend, completely different trade. The risks involved in that and the potential rewards are both completely different. There are far more risks with holding that just until Monday. So the difference between Friday close and Monday open is dramatic. It's huge. And you need to understand that. What do I want to compare that to? Well, using levels or indicators, technical analysis stuff. So most retail traders are looking for these levels to buy. Now, let's say you found one on Friday. My argument is it's completely different on an intraday basis to holding over till Monday. But if you believe in levels and technical indicators, then you just buy that and you will hold that over whatever your holding period will be. What I'm saying in this video is there's a complete difference between holding a trade like that on an intraday trade on a Friday and holding it over that announcement on the Monday. Now, technical traders are told ignore these sorts of fundamentals and that. Absolute nonsense. When you're trading, particularly when you're position trading, you need to understand the participants, what's being priced in, what are they likely to do, how are they likely to react to these events. This is what's driving markets daily, weekly, monthly. And if you're able to make these kinds of decisions, if you're able to see what people are pricing in, what are they likely to do, then that's how you'll come up with better risk-reward judgments and better trades. So understand the difference between this intraday and holding over Monday. If you can do that and you think that's correct, then that's what's going to make you make better decisions going forward. If you just trade off levels and look to hold them over each of these periods, you're taking risk at the wrong times, too much risk at the wrong times, and you're going to find like what happened on Monday morning. They gapped lower because the announcement wasn't as good as expected. So these metals gapped lower on Monday. Yeah, they bounced back a bit. Copper did bounce back and then went lower again a few days later. Completely different trade. So hope you like this video. Hope you understand what I'm saying and it helps your trading.